Hello and welcome to Explain the Charts. Today, we're looking at GBPUSD. We'll be covering recent news and events, then diving into the charts to analyze price action, trends, and potential trading opportunities. Recent news indicates GBPUSD has been experiencing a weekly retracement, trading near a 3-week low below 1.3500. This has been driven by poor UK GDP stats and safe haven flows boosting the US dollar. Trump's planned tariffs on Canadian imports and other trade partners are adding to market caution and USD strength. Now, let's look at the daily chart. We can see a broad overview of the price action over the past several months. Notice the general volatility, with periods of upward and downward trends. We can see the price has generally been trending downward recently. However, there was a high on July 11th and 12th of 1.2923 and 1.2989 respectively. Zooming into the last few weeks on the daily chart, from June 23rd to July 11th, we see an attempted recovery followed by a recent pullback. This is likely related to the GDP news from the UK. The 1.3500 level seems to be acting as psychological resistance, lining up with the Fibonacci level mentioned in the news. Now let's switch to the 1-hour chart for a more granular view of recent price action. We can see the price struggled to break above 1.3600 and has retraced to 1.3499. Focusing on July 11th and July 12th, around 1752105660000 timestamp, the hourly chart confirms the rejection at this level. Finally, examining the 15-minute chart, we can pinpoint short-term support and resistance levels. Near the current date time, around July 8th, 2025, 22:46 and 57 seconds Universal Time Coordinated, you'll see there are many small candles representing choppy behavior. This indicates high levels of uncertainty, and traders should be wary of trading in these times. Based on this analysis, here's what to watch for. Important price levels to monitor are the 1.3500 support and the 1.3570 resistance. If the price breaks below 1.3500, further downside towards 1.3465 becomes likely. A break above 1.3570 could signal a move towards 1.3620. Given the current economic climate, a bearish scenario is somewhat more probable, 60%, especially if UK GDP data remains weak and Trump's trade policies continue to support the USD. However, a bullish reversal, 40%, could occur if the Bank of England signals a less dovish stance or if Trump softens his trade rhetoric.